What I'll say is, I think most people I talk to, if I were to say, I think it's likely that Bitcoin captures 1% of global assets. If $1 out of every $100 that people invest into stocks, real estate, gold, whatever it is, they were to invest in Bitcoin, do you think that's probable? Do you think that future could happen? Most people would say yes. If that's the case, the price of Bitcoin is exponentially higher. If you think it can capture 2 or 3% of global assets, the price of Bitcoin is exponentially higher. In the high 6 figures, in the 7 figures. If Bitcoin even gets, the global asset bucket is so large and Bitcoin is still so small.
Bitcoin is going to $100,000 per coin, and then onto $1 million is the outlook from Steven Lubka, the managing director and head of private clients and family offices at Swan Bitcoin. For those who are unfamiliar with Steven, he's the managing director of Swan Bitcoin, which is a Bitcoin-only exchange that allows investors to accumulate and stack BTC. Steven works all day with high net worth individuals and wealthy family offices in getting them started with investing in Bitcoin and allocating their funds to BTC. His prediction carries a lot of weight as he has unfettered access to seeing what the institutional and high-value client sentiment and interest is in the Bitcoin and crypto space. And his message is that wealthy investors are allocating more to Bitcoin than ever. And with BlackRock's planned Bitcoin ETF, this number is only going to increase rapidly. Make sure to stick around to the end of the video where Steven breaks down what his aha epiphany moment was for Bitcoin and why he has full conviction in Bitcoin as a generational asset. Also, only a small percentage of my viewers are actually subscribed. If you enjoy finance content, consider subscribing or liking the video. It's free and you can always change your mind.
Bitcoin is something like 600 billion right now. US, just residential, not commercial, is 31 trillion. So just one country, obviously a large country, just residential real estate is roughly 60 times. So what's, 27,000, let's call it $30,000 times 60, just to be worth residential real estate. And there's bonds, there's equities, and the idea is like, people might think, well, what do you mean Bitcoin's gonna capture part of real estate or equities? It's not the same. Those things aren't equivalent. You own a house because it's a house. You own Bitcoin for a different reason. The reason Bitcoin might capture part of those asset buckets is because there's a monetary premium. To real estate, definitely. I would argue to equities and to pretty much all financial assets. What's a monetary premium? It means that because the currency is being debased and you can't hold money as money, well, you need to invest it in assets. And so there's this kind of forced investment. And many economists and people that are proponents of inflationary money say that's the whole point. That this isn't a secret. They want you to be forced to invest. And so people take their cash and they have money, they have cash, and so they buy real estate. And they don't buy it because they want a home to live in. They don't even really buy it because they think this particular piece of property is a great investment. They just need to invest the money. And so real estate values are 10% or 20% or 30% higher than they would be if that wasn't happening. And so the thesis with Bitcoin is if you have an asset that you can just save money in as money, then maybe that 30% monetary premium, I'm making that up, on real estate comes down to 10% and Bitcoin captures the difference. I would be pretty confident that we see Bitcoin in the 6 figures, I'm gonna say by the end of 2024. I'm not a big technical analysis person. I think the realities of markets happen not on that level. I think that you could have 2 scenarios where Bitcoin hits X resistance level, and they could be totally different based on investor psychology, based on what's happening with the Fed, with liquidity.
Right.
I think I can speak for Corey, and I would agree with this. I think we all could see $1 million Bitcoin by 2030. We're talking in today dollars.
Oh, in
right.
today's
So there could be varying rates of inflation, but in relative to prices today, we could see $1 million Bitcoin 2030. I'm personally very confident, but I can speak to that question. And is there maybe more risk that Bitcoin isn't here in, X timeline than gold? Yeah, probably. That's reasonable to say. It's a newer asset. It has less of a history. It's also in some ways like it's kind of poking the financial system a little more. It's a little more combative in a certain sense. It's a little more on the offense. So all of those present a certain level of risk. Now, many investors view Bitcoin as like supremely risky. And I think that's wrong. I actually don't think Bitcoin's that risky. I think gold is very secure, right? So like you're comparing against like the bedrock money of civilization for, thousands of years, right? So that's obviously a pretty secure and it has a long history, much longer than our current financial system. So yeah, I mean, Bitcoin's gonna have a higher risk profile than that. But one of the things that I think investors get wrong when evaluating Bitcoin's risk is they confuse volatility with risk. And I mean, this comes from Wall Street because they literally use the word risk to mean volatility. It's a terrible semantic option because something's volatility is just how much the price changes. Something's risk, in how I would define it, would be its chance of failure, its chance of going to zero or to near zero or to like completely failing at its mission. And I see this as Bitcoin's volatile, sure, but is Bitcoin risky? Does it have an extremely high probability of failure? I don't think so. Not at all. These investors, they're sizing their allocation. They're not going all in Bitcoin, They're buying a piece, right? And I think they understand. They've generally done their due diligence. They understand what they're buying, and they have a few questions for us, and they want some guidance, but they generally, in the broad strokes, understand it. And they're taking some level of risk. I mean, every investment, you can buy Apple stock and Amazon. You're taking some level of risk. Is Amazon going to be here in 50 years? Honestly, probably not. Jeff Bezos has said as much. He said, we're probably not around. He has said like some time frame, it might have not been 50, like Amazon's probably not going to be here. Because that's the history of corporations. The dynamism, the growth, like, yeah, it didn't go to zero, but like, if you kept it all in GE and General Motors instead of buying Amazon or Apple, like you missed. I'm just saying that investors, they know that there's a risk to everything. Like that's what I'm saying. There's risk to Apple stock. There's risk to holding General Motors. There's risk to these blue chips. So any investment you're gonna, I think gold is particularly like it has a unique history. So when that's your benchmark, the comparison looks a little different. But do I think Bitcoin could outlast Amazon? I absolutely do. On one hand, I have very few concerns with the longevity of Bitcoin. I think Bitcoin, if it is successful, will last a long time. I think it's kind of binary in that. Like, if Bitcoin becomes adopted as a global money, I think it will last a long time as a global money. Now, how long, what sort of time frame? I think humans are very bad at predicting like the deep future. I don't think there's anyone alive today that can say, oh, it's going to make it 1,000, like 500 years, but not 1,000, right? None of us know enough about the future to really say that. But I think what I would say is like, as long as Bitcoin becomes adopted as a global store of value, I think it is used by the world for a monetary epoch, like for an era of money. I don't think the world moves on from Bitcoin to another kind of store of value in any sort of, it will be a generational time frame. It will be a generational time frame. It's interesting because when I first got interested in Bitcoin, I would say I kind of really didn't get it in a certain sense because I came from more of a technical background from like software. And so I saw it as this interesting piece of software. And I thought, this is really cool, like payment network, awesome. But at that time, I was not as educated as I am today on finance, on money, on the economics of it all. And it was only maybe a year and a half later that I really came to understand how the contemporary financial system works and monetary system and the history behind that. And it was once I really got, oh, this is how it's functioning today and these are the risks, that Bitcoin clicked to me not just as a compelling technology, but a monetary solution. And that was kind of my aha moment where I got much more kind of all in on a belief level.
And when was that?
Probably mid-2018.
Mid-2018.
Yeah, I got into it probably early 2017 before the bull market. And by mid-2018, I would feel like it really clicked for me why it mattered, why it was important, why Bitcoin had significance. It wasn't just like a cool invest. Yeah. So for me personally, the reason I think Bitcoin is significant is because I think we live in an era of so much financialization, and this happens in traditional finance, and it's actually been replicated in many ways in non-Bitcoin crypto to some degrees, where you're seeing we create financial products for their own sake. We put derivatives on everything. The mortgage term keeps it going for a 30-year to a 40-year, like these discussions, right? This is financialization. This is financial products on everything. And you're seeing financial firms as a percentage of US GDP. I believe the last time I checked, it was something like 7 or 8%. That's extremely high. When you think about an economy, these firms, while they serve an important role, I'm not saying they don't add any value. You do need a functioning financial system, and some level of these products is good. But almost a tenth of your economy being profits that are being extracted by JP Morgan and Goldman, that's a very excessive level of financialization. It could be a tenth of the size, and not only would that not be harmful to the economy, it would be beneficial. And so what excites me about Bitcoin is that it's kind of a definancialization. And it is a way that we can kind of pull back from these excesses in broad financial markets, and that we can have more organic capital formation. And when you have forced investment, like we were talking about before, where you have to invest, you're fleeing inflation the whole time, you get malinvestment. You get people who invest into companies like Theranos and these like high-flying, ultimately fraudulent or highly speculative companies. That capital is not fungible. These are important things, and we live in a financial system and an economy and a society where our smartest people are optimizing advertising algorithms for Google and Facebook.
Yeah.
And they're going to Wall Street. Like, if you want to make money and you're a smart person, you either go make advertising more predatory or you go to Wall Street. That's not a healthy economy. Like, these people should be working on the stuff we need as a society.
So there's Swan Bitcoin's Steven Lubka, whose conviction has never been higher. With predictions that it's sprinting towards $100,000 per coin by the end of 2024 and then launching towards an astonishing $1 million by 2030, Steven's foresight comes with substantial gravitas, given his front row seat to the investment strategies of high net worth individuals and family offices. Interestingly, his prediction echoes that of Cathie Woods and ARK Invest, who have a base case 2030 Bitcoin price prediction of $1 million per coin. Likely, they have done the same research and gone over similar datasets to ultimately come to the same conclusion. What we learn from Steven is that there's a crescendo of confidence among the wealthy, and they increasingly commit their fortunes to Bitcoin. With the behemoth BlackRock preparing to enter the arena through its Bitcoin ETF, it seems the floodgates are poised to open. As we draw this video to a close, let's reflect on Steven's own journey and the aha moment that solidified his unwavering belief in Bitcoin as an asset that will transcend generations. It's not just about wealth, but being part of a transformative movement. Before we sign off, a reminder that if you relish sharp financial insights like these, subscribing and liking the video would be a great way to support the channel. Anyway guys, thanks for joining us, and until next time, keep an eye on the horizon and your portfolios prepared for the exciting possibilities ahead. As always, all the best.